Hello, and welcome to CGM webPRACTICE, Evaluate Your Revenue Cycle Performance. In this session, we will explore how analytics and reporting measure the revenue cycles as well as how to promote the AR process. We will peek into aging reports by provider and how to manage denials. We will learn how to calculate net income or loss per provider and how important collecting at the point of service is. During the presentation, we will suggest some best practice guidelines. Did you know that you can help to drive payment? Reporting and analytics measure the revenue cycle's performance based on financial reporting, benchmarking, budgeting, and forecasting. Key performance triggers such as aged AR, aging analysis by provider, denials overturned by appeal, net income loss per physician, and point-of-service collection rates are also indicators of the revenue cycle performance. Work third-party payer AR within 15 to 30 days of submitting the claim. Identify a staff member to be a liaison with high-volume payers to promote the process. Use any collection management reports available. The AR aging report by payers may identify payment issues such as third-party payers holding payment beyond payment guidelines. Establish policy for collecting high-dollar and older accounts. Define when an account will transition from insurance to patient pay in the absence of payment. Consider 30 or 45 days after claim was initially transmitted. A statement to the patient may prompt them to work with the insurance company. Confirm that statements are being sent if the statement process is automated. Avoid using manual holds. Explain to the patient that the system automatically produces statements. Follow the patient pay process consistently. Staff members can use scripts if necessary to promote consistency to all patients. Develop a culture through documentation in the financial notes. Establish the time frame that the account will be worked internally before it is written off or transferred to an external collection agency. Consider 90 to 120 days. If using an external collection agency, develop a method for tracking their success and comparing results. If they can collect 40% more than your internal staff, maybe staff efforts are lacking. Benchmark to evaluate the effectiveness of internal and external collections. Consider days in AR and write-off percentages. Best practice is 39 or fewer days in AR. Aging by provider, how are you doing? Keep it simple. There are hundreds of reports. Focus on what it is that you want to find out. Claim submission. Are all claims billed and submitted timely? Analyze aging. What about payer types? Can you see any problems? Look at outstanding balances by payer types. Look at the totals to get an idea of monthly billing totals. Start by comparing one payer at a time's current column. If billed and being paid correctly, the total should decrease significantly each month. Specific managed care plan problems. What about any specific managed care plans? Can you identify any problems? Run an aging report listing of all the individual payers. Do the same review as previously. Compare one payer at a time. Focus on the current column. If billed and being paid correctly, the totals should decrease significantly each month. Identify the worst accounts with the highest and oldest outstanding balances. Check the aging detail by individual patient to identify problem accounts. Start with the highest balance, then those with the oldest balances. Focus on the older balances first due to timely filing limits. Get those claims submitted. Denials management is at best proactive and diligent. Prior to a patient's visit, verify eligibility. 85 to 95% of claims are paid on the first pass or prompt an action to redirect collection to a secondary payer or the patient. Become familiar with specific codes that prompt denials with your payers. Look for areas where the revenue cycle team are repeating tasks. Develop denial analysis tracking procedures and implement interventions to correct. Avoid repeated denials. Managing denials must be done daily, weekly, monthly. Capture, analyze, and act on all denial information. The only way to eliminate the root cause of denials is to improve workflow. Create a mechanism to trap denials from all sources of remits. Organize denials into categories such as eligibility, coding, non-covered, and authorization or referrals. Analyze the data and develop workflows to reduce the denials. Determine the per-physician net profit or loss to identify opportunities for maximizing appointment slots and increasing practice productivity. Calculate the number of patient hours occupied on the schedule divided by the number of patient hours available per physician to determine the availability capacity in the patient schedule. To calculate if there is profit or loss, offset the billable hours, procedures, research or study revenue, and other revenue sources with expenses, salaries, and benefits. You can dig even further to determine exactly where deficiencies are. Collecting patient responsibility amounts at the time of service provides an opportunity to increase revenue, decrease collection costs, and accelerate cash flow. Identify any patients who cannot pay their bills and counsel them about available options for covering their patient responsibility. Reviewing and managing your revenue cycle requires applying best practices along with continuous monitoring and measuring of the entire cycle. Technology will assist you to gain the insight and efficiencies as well as identify any deficiencies. The cycle starts at the time the payer contracts are negotiated, fees are set, appointments are scheduled, and ends with the claims that are paid in full. Each step has special importance. Monitor all phases timely and share the results to achieve revenue cycle success. Now let's take a look at some tools within CGM webPRACTICE to help you work AR and collections. Printing aged AR for insurance reports gives you the ability to identify payers that are not in compliance with payment guidelines. To print a report, go to Reports, Insurance Related, Aged Accounts Receivable for Insurance, and select your sort option. Aged AR for insurance uses insurance aging, which means the balance starts aging as of the date it was filed to the insurance carrier. As soon as the primary insurance payment is posted and a claim is filed to the secondary, the aging bucket restarts with the secondary carrier. The same thing happens when the claim is filed to the tertiary carrier. When printing the report, you can select a specific plan, carrier, type of claim, that is primary, secondary, or tertiary, detail, notes, balances older than, and balances greater than. This is an example of an aged AR by insurance report. You can easily see the various aging buckets, identify the payer with the most outstanding claims, and see the payer mix. The Insurance Collections menu provides functions that you can use as a collection tool to work unpaid insurance balances. To access this function, go to Collections, Insurance Collections, and Work Accounts. This module allows you to take a more aggressive approach and to get your claims paid timely. Set up default expected payment days, default timely filing limits, and standard appeal letters. Work Accounts provides an electronic work list so your staff can easily identify which items need to be worked. No more printing manual AR reports, which are out of date within 24 hours of being printed. You can filter by expected payment days. For example, if your carrier pays within 15 days and the claim is still unpaid 20 days after being filed, the account shows up in the work list. Work all of your primary carriers first, which are the moneymakers, or target unpaid claims over $200. As soon as a claim is paid, it is automatically removed from the roster. You can also do an analysis by provider to the number of unpaid accounts broken down by insurance balance and patient balance. The report uses accounting date aging. To print this report, go to Reports, Aged Accounts Receivable Reports, Aged by Performing Doctor, or pick your desired sort option. CGM webPRACTICE provides several tools to help you manage and work your denials daily. Set up practice denial codes that are used during payment entry to track the various types of denials that you receive. To set these up, go to Tables, Practice Denial Codes, Maintain. When posting payments, use these denial codes to document why claims are not paid. Some examples are eligibility error, coding error, and wrong insurance. Generate and review your denial reports monthly to identify problem areas. Put a process in place to correct it and review with the appropriate staff. To print the report, go to Reports, Insurance-Related Reports, Denial Reports, by practice denial reason, or choose your preferred sort option. eMedix is another tool that you can use to stay on top of denials by working rejected claims daily. To access the eMedix portal, go to Billing, eMedix website. Track your confirmation reports for claims submitted with our online portal, which provides you with an easy way to stay on top of carrier denials and access statistics. Select your process date range, and you see a summary of total claims received, processing, acknowledged, and rejected. The rejected are the ones that need to be worked, corrected, and refiled. Create a process where you identify the denial and review with the appropriate staff members responsible to help reduce ongoing denials. Best practices recommend that denials and rejections be worked daily. eMedix also provides another great solution called Revenue Resolve. This tool helps you stay on top of your electronic remittance denied claims. Each ERA received by eMedix automatically identifies denied claims into 7 standard business scenarios: eligibility, missing or invalid information, service not covered by health plan, billed service is bundled, and additional information required. You can create work lists and assign them to specific employees by payer, denial type, and also put a due date on it and track accounts worked, not worked, etc. Again, best practices recommend that denials and rejections be worked daily. The benefit of Revenue Resolve is that the denials are automatically identified directly from your ERA files. You can easily generate a report to show the net income or loss by provider by printing a utilization report. To print the report, go to Schedule menu, Scheduling Printing menu, Utilization Report. This report shows the available slots on each provider's schedule and how many actually had appointments. This is an easy way to see the number of open slots and actual patients seen. The scheduling module provides numerous tools to help with point-of-service collections. When patients call in to make an appointment, collect their balance due. Quickly review patient demographics every visit to reduce eligibility denials. Take advantage of alerts to open the lines of communication between your departments. For example, flag accounts when they are past due. The CGM web reminder flag displays on each applicable appointment. This is an easy way to identify patients with failed insurance and correct it before you provide services. Statistically, the best time to collect the patient portion is when they are checking in for an appointment. Collect the balance due, the copay, and print a receipt. Reports by user are available for balancing. Use no-show to track patients that didn't show up. It cancels the appointment as a no-show, puts an entry on the patient ledger, for example $50, and tracks the number of no-shows on the summary screen. The Patient Collections module provides you with the tools to enhance the profitability of your practice with an organized and effective process. To access this function, go to Collections, Patient Collections, Work Accounts. This module allows you to take a hands-on or hands-off approach. Set up statuses to track payment plans, do a collection letter campaign, print a third-party collection report, and transfer accounts to your collection database. The statuses help you to aggressively target patient balances without having to work manual reports. You determine how many days a patient has in each status before they migrate to the next status. For example, once a patient hits 30 days old, they migrate to status 1 and receive a phone call. 15 days later, if the account remains unpaid, they migrate to status 2 to receive a past due collection letter. Work Accounts provides an electronic work list so that your staff can easily identify which patients need to be called, worked, or have a collection letter printed. Once an account is paid in full, it automatically is removed from the collection roster. Turnover functions can be used to transfer patients to any third-party collection agency and move accounts to your collection database. If you would like additional information regarding CGM webPRACTICE and evaluating your revenue cycle performance, we offer a variety of training options, such as virtual, at your location, or in one of our CGM classrooms. Call 855-270-6700 and select option 4, or visit training.cgmus.com. Thank you for your time and attention.